Welcome to the CFA Level 1 practice test. Domain Financial Statement Analysis Part 5. What was Jollof Incorporated's historical cost of inventories and work in progress excluding construction contracts? A. 1,845 million euros. B. 2,373 million euros. C. 2,394 million euros. D. Not applicable. Answer is B. 2,373 million euros. What is most likely to occur in the year a company capitalizes rather than expenses an expenditure? A. The net profit margin will decrease. B. The total asset turnover will increase. C. The debt-to-equity ratio will decrease. D. None of the above. Answer is C. The debt-to-equity ratio will decrease. Which item is least likely included in a typical MD&A section of a company's report? A. Company's capital resources and liquidity overview. B. Independent auditor's unqualified opinion. C. Discussion of critical accounting policies. D. All of the above. Answer is B. Independent auditor's unqualified opinion. How is a decline in investment property values reported under IFRS fair value model during geopolitical instability? A. Loss in the income statement. B. Impairment loss and other comprehensive income. C. Decrease in revaluation surplus in equity. D. Not applicable. Answer is A. Loss in the income statement. Which step in financial statement analysis involves making adjustments and calculating ratios? A. Gathering data. B. Analyzing and interpreting data. C. Processing data. D. None of the above. Answer is C. Processing data. How much cash did Goldleaf Corporation receive from equipment sale given gains, depreciation, and equipment values? A. 11 million US. B. 18 million US. C. 7 million US. D. None of the above. Answer is B. 18 million US dollars. What is the likely impact on financial statements if inventory net realizable value drops below cost due to a market downturn? A. Reduction in inventory and net income. B. Increase in shareholder equity. C. Deferral of loss until sale. D. Not applicable. Answer is A. Reduction in inventory and net income. Which scenario analysis best helps assess equity investment risk under different economic conditions? A. Compare current dividend yield to industry averages. B. Calculate historical beta versus market. C. Project performance under varied macroeconomic assumptions. D. None of the above. Answer is C. Project performance under varied macroeconomic assumptions. How do analyst concerns differ when evaluating a company for debt versus equity investment? A. Debt, business model focus, equity, regulatory filings focus. B. Debt, ability to pay interest and principal, equity, profitability and per share value. C. Debt, management commentary, equity, audit reports. D. None of the above. Answer is B. Debt, ability to pay interest and principal, equity, profitability and per share value. Financial statement analysis primarily assesses a company's A. Historical stock price volatility. B. Ability to generate sustainable profits and manage liabilities. C. Adherence to corporate governance best practices. D. None of the above. Answer is B. Ability to generate sustainable profits and manage liabilities. Thanks for watching. For more learning videos and tutorials, subscribe to BISP Trainings.